Is your data that's flowing from Fishbowl to QuickBooks a mess? I'm Lance with Brandow Consulting, Fishbowl Inventory expert since 2006. In this video, I'm going to show you how to properly set up the Fishbowl Inventory QuickBooks integration, and also give you some key tips on how to properly use Fishbowl so the data that's flowing from Fishbowl to QuickBooks will be clean and expected. First of all, let's take a look at the screen where it all begins, the accounting integration screen in Fishbowl Inventory. Here we see the General and the Configuration tab. In this integration configuration is where it all begins. I'm going to click right there and open this up. There's another video Fishbowl put out on how to successfully connect to QuickBooks. Be sure to take a look at this to see how to set this up. In this video, we're going to take a look at best practices on your account mapping and this usage. So here we see the screen where the account mapping is set up. We have your AR and AP accounts here, your part type accounts here, your sales accounts there, shipping accounts, and then finally your inventory accounts. These are the accounts that are used for inventory type parts. These are the accounts that are used for shipping type parts. These are the accounts that are used when a sale is made. And these are the accounts used as expense or COGS type accounts for each one of these part types. Fishbowl has different part types than QuickBooks does. It's important to understand what we're talking about here. Let's go to that screen. Here we are on the part screen with a list of part types. When you create a new part, Fishbowl wants to know what type of part you're creating. Inventory, service, labor, overhead, non-inventory, internal use, capital equipment, and shipping. What type of part you choose will determine how Fishbowl will behave and also how that transaction will flow through to QuickBooks, which account the journal entry will hit. Okay, let's go back to where we were with the account mapping. Don't be too concerned about this because this is only the default accounts. These accounts can be overridden on a per part basis. Let's say you have a lot of different types of sales accounts, and each product may map to a different account. Notice here I've created an account called Wrong Fishbowl Mapping. I got this idea from one of my accounting partners years ago. I think it's a great idea in a lot of situations. Basically what this is saying is we don't want a default account. Meaning, if someone creates a new part, we want them to map it to a specific income account and not just go with the default. If they accidentally do that, then the accountant will see on the chart of accounts, Wrong Fishbowl Mapping. So if we ship something from a sales order or fulfill something from a sales order, it will be mapped to the specific account unless someone forgets. We did this down here below as well for the inventory asset account. Let's go to the chart of accounts in QuickBooks. We see here that we have finished goods, WIP, and materials inventory. Instead of making the Fishbowl inventory asset account the default, in this example, we've made Wrong Fishbowl Mapping the default. So remember, all of these accounts right here are just default accounts. That's all they are. If the part is not specifically assigned, then it will default to these accounts. So you're probably thinking now, wow, I have more questions than answers at this point. Thanks. If you've learned anything by now, hopefully you've learned one thing, and that is, don't just connect Fishbowl to your live QuickBooks account. Connect it to a practice QuickBooks account. There's a lot of things you need to learn and understand before you connect it to your live QuickBooks account. So if you're in the middle of connecting to your live account, consider pausing for a minute. Make a copy of that live QuickBooks account, rename it, and call the file Fishbowl Practice. Start all over again and connect to that file. So this is the first step where it all begins. I'm going to go through and explain the consequences of selecting each one of these. Accounts receivable. This is an all-in-one thing. There is actually no per part override, per customer override, or per vendor override as I make this video in version 9.11. Same thing with accounts payable. So when you ship something from Fishbowl Inventory, Fishbowl will post a credit to income and a debit to your receivables for the charge you gave to the customer. And this is the account it will debit. If we scroll down to the income section, this is account that it will credit unless the product has an override account. Here is the product override account right here over on the product screen. Notice it says income and it is mapped to a specific income account. If you'd like to update these en masse, use this column here on the part product vendor pricing spreadsheet import. Okay, let's go back to this. So then your accounts payable will be credited when you receive something. Notice there is no place on the vendor screen that allows you to select an accounts payable per vendor. This account number field is not talking about QuickBooks account. There is no place on the customer screen that allows you to assign a customer to an AR account. Once again, there is no place on the purchase order screen that allows you to select an account. And there is no place on the sales order screen that allows you to select an account. Not on the item level or on the order level. So once you've selected the accounts receivable and the accounts payable, that's it. You're locked in. The rest of these accounts are more flexible. Now, undeposited funds is used when receiving a payment in Fishbowl. On the sales order screen, there's a payment button. When you click on it, there's actually a place where you can override the deposit account. When you first set up the Fishbowl QuickBooks integration, whatever you choose will automatically pop up here. Okay, so hopefully you understand how the AR, AP, and undeposited funds work. Now, capital equipment is a type of part that you select when you're creating a part. There's no feature in Fishbowl that handles depreciation, but if you'd like to recognize your fixed asset values in Fishbowl, you can do that. If you need a refresher on what each field means, notice this little blue tooltip that popped up that says all transactions associated with the capital equipment part types will be tracked in this account, usually a fixed asset account. Fishbowl gives a brief explanation to each field. So your capital equipment is like machines that you use to manufacture. Internal use, that could be office or bathroom supplies, if for whatever reason you choose to use Fishbowl to purchase those instead of QuickBooks. Non-inventory deserves some explanation. A non-inventory type part is a tangible object that you can hold in your hand and put on the shelf. You can pick it and you can pack it in Fishbowl. However, if it's something insignificant enough that you don't want to track the quantity or the asset value of it, non-inventory gets expensed as soon as it's received. Non-inventory does not show up on your balance sheet, but it is a tangible object. Service is something you buy from a vendor or sell to a customer. Labor is something you perform internally, especially if you're manufacturing. Overhead is something you consume in manufacturing. Gas, electricity. Maybe you want to track the cost of wear and tear on your equipment. All of these are part types in Fishbowl. All of these can go on a bill of material or a work order. Now, if none of these show up on the balance sheet, which they don't, how does Fishbowl track the cost? If we go to one of these part types, I selected the non-inventory. Notice it says cost right here. Basically, it's following a standard costing concept. This is the cost per unit of this unit you have here. This is the cost per unit. This is the cost that's used when you consume it in a work order, or in the event that you may sell it. This is the cost that is credited when sold from a sales order. If you purchase painting from a vendor, let's use this one, coating service. We purchase coating services from a vendor. The actual cost will be used when fulfilling that purchase order. If you also put it on a bill of material, this is the cost that will be used from the bill of material. Obviously, this one's not set up to do that. You see how important it is to have everything set up correctly. One thing to understand about Fishbowl is it's not like QuickBooks. In QuickBooks, you can go back in the history, change just about anything you want to change, as long as it's not locked behind a closing date. In Fishbowl, it's way more limited with the flexibility of changing the history. A general rule to adopt is it just can't be changed. There are so few things that can be changed in history. It's good to go into this understanding that history just can't be changed in Fishbowl. Yes, you can void a shipment. If you make a mistake, you can void an item receipt or a reconciliation if you make a mistake. But if you use the part that's been received, then you can't go back and void that receipt. If you've exported an invoice to QuickBooks since you've shipped, then you can't go back and void the shipment. If you've completed a work order and finished out the work order, you can't go back and edit anything in the work order. For those three scenarios, you have to create a cancellation transaction or an opposing transaction, a vendor credit, or a work order disassemble or reversal, a credit return for sales orders. So it's best to carefully get it right the first time in those situations. Now let's look at these sales accounts. This is your income account, discount expense, and discount income. Discount expense is the charge you incur when you award a discount to a customer. This one is very interesting, this discount income. This is used when that customer returns the part that you just sold to them with a discount, and therefore it reverses the discount when it is returned. Miscellaneous expense is used when putting a miscellaneous type item on a sales order. Back here on a sales order, when you click this little green plus sign, it has miscellaneous sale right there. That's when that's used. Now at this point you may be thinking, there's a lot of transactions. There's a lot I need to understand. One good resource for this is the journal entries, the QuickBooks journal entries page on the Fishbowl Inventory website. Probably one of the most referenced places on Fishbowl. Go to Fishbowl Inventory, type in journal in the search, and then click QuickBooks journal entries. Bookmark this page, and you'll see all the different types of transactions that Fishbowl can perform. If you click on one of them, it'll bring you straight to an explanation of how that Fishbowl activity will affect QuickBooks. Awesome, awesome resource. Definitely want to bookmark this page. Study it, understand it, and test it yourself. Once you create a transaction in Fishbowl, go back to the accounting screen and click Export, and go find that transaction in Fishbowl. Go find that transaction in QuickBooks. Shipping income, shipping expense, shipping accrual. These accounts are new for most people. Shipping income is what is hit when you charge the customer for shipping. You put an actual charge on the sales order. Shipping expense is what the vendor charges you. Shipping accrual is what the carrier charges you directly. Now, this isn't easy to see, but I'll show you where this shows up in Fishbowl. In the reconciliation wizard way back on the receiving screen, when adding a shipping charge, there's this option that says add item to vendor bill. It's always checked by default. If that is unchecked, then that means that you are receiving the charge directly from the carrier, and this will hit your shipping accrual account. Now over here on the shipping screen, under the carton at the very bottom, there is this cost field. That is the cost incurred directly from the carrier. If you're integrated with ShipStation, UPS, and DC or FedEx, this cost will automatically be populated by that software's integration with Fishbowl. If there's a cost in here when something is shipped, then that will hit your shipping accrual account. Now the inventory asset, that's probably the one that is most intuitive, that most people understand. That's debited when you received. It's credited when you sell. If you're in manufacturing and this is a raw good, you're consuming a raw good, whatever account the raw good is mapped to will be credited, and whatever account the finished good on the work order is mapped to will be debited. Now one thing to understand about cost of goods sold, it is true to its traditional definition. Keyword sold. Fishbowl does not use this account unless you actually ship something out. You have to sell it before Fishbowl will use this account. Now these same accounts show up on a per item level as well. Here they are back on the part screen. I like to call these the override accounts. Notice whatever we had set on the default accounts in the previous screen show up here. It says default, default, default. But this one has specifically been assigned to the account that's best used for this part. And these accounts can be assigned in mass on a spreadsheet, as we see here. I have another video that covers the best practices in filling out this spreadsheet properly. This is the part product vendor pricing spreadsheet import. You can access by going to the top left-hand corner, File, Import or Export. You can import it or export it, and it's called the part product vendor pricing spreadsheet right here. Then the very last one, cost variance, is used if you're in the standard costing method. If you have standard costing method turned on, then Fishbowl will track the variance between the standard cost and the average cost, the standard cost or the purchase cost. So when you receive from a purchase order, this cost variance will either be debited or credited depending on whether you purchase something at a lesser or higher price than your standard cost. To see if you're on the standard costing method, go to Tools Module Options from your accounting integration screen and click on Costing. This example shows this file is on the average costing method. If you're on the standard costing method, then on the part screen, this standard cost will need to be filled out for each one of your parts, or else the result could be disastrous. These standard cost fields can also be created from a spreadsheet import. Same spreadsheet, part product vendor pricing spreadsheet, this column right here, the STD cost, if you're on the standard costing method. So that brings us through this entire part account mapping, or default account mapping. When setting up for the first time, if you're on the practice file, I would go ahead and pull in as much data as you possibly can. Now, usually when you're connected to the live file, especially for larger companies who are changing the item list, much of the time you can't import items from QuickBooks, and if you can't import items, then you can't import invoices or sales orders or purchase orders because those have the item names on it. So I would say import what you can, vendors and customers, unless you feel like you don't trust your customer list and it needs to be cleaned up. But generally, for most people, import your vendors and customers. Classes, import as much as you can. And that gets things started. That sets everything up for the first time. You may have noticed that there's some accounts on that list that you don't currently use, that you don't currently have in your QuickBooks file. So before doing this yourself, you may need to go back to your chart of accounts and create accounts that you weren't previously planning on using. Once you have Fishbowl set up properly to talk to your accounts properly, then you need to monitor the daily export to QuickBooks. Make sure that export is working properly and the data is flowing over properly on a day-to-day basis. On this screen right here, click Export to see the export flow through. Notice it gives us a pop-up of all the different transactions ready to export. There's a green triangle back here in the background. This tells us that there is data in the queue ready to be exported, so you know something will flow through once you click this green triangle. Now, when Fishbowl performs an export to QuickBooks, it behaves a lot like a QuickBooks user. It actually logs into QuickBooks, much like a regular human being would log in. But then it dumps its data at lightning speed and then logs back out. It actually uses a QuickBooks username and it uses a QuickBooks license seat. Wow, look at that data flow through to QuickBooks. This is what we like to see. All possible exports exported, status done all the way down. But of course that doesn't always happen. Just like QuickBooks may talk to you when you use Fishbowl, when you use QuickBooks, QuickBooks talks to Fishbowl. It may give Fishbowl an error message, or it may give Fishbowl an informative message. Also, sometimes QuickBooks may have a pop-up, an advertisement for instance, that Fishbowl doesn't know what to do with. These are the kinds of things that can stop Fishbowl from pushing data through to QuickBooks. It's important that someone sees these messages QuickBooks is sending to Fishbowl and does something about the message immediately. So yes, there is a scheduled export. On the scheduled screen under Setup, you can set up an accounting export to run automatically to QuickBooks every day. I do recommend that you set that up. However, I warn you not to get complacent. Be sure to look at the success messages or manually run an export yourself every day. Keep the data flowing from Fishbowl to QuickBooks. On that note, notice there is nothing here that allows you to pick and choose which transactions to send over to QuickBooks. The Fishbowl QuickBooks integration is an all or nothing thing. If you want to see what's going to go to QuickBooks, from the accounting screen, go to Reports, Export Summary, or Adjustment Reports. This will give you a good idea of what is ready to flow through to QuickBooks before you click that Export button. These reports have a date range, and they also have a section that allows you to check the box that says Show me what went to QuickBooks or Show me what will go to QuickBooks. I hope this video was informative. Please comment below if you have any other video ideas or any questions about this video, if there's any clarification I need to make. And subscribe if you want to see playlists and other videos like this.